does sort of speak to the fact of whether they can pull this off, which, look, he's still trying to project confidence that they can pull this off. It goes to the issue of whether they've waited too long and now they're going to do too much. Esther George today, she dissented. She wanted 50. But speak to that issue, if you could, because I know you have huge doubts. You don't think it can happen. You don't think they can pull off a soft landing.
No, and I kind of I think it's eye-catching, frankly, or ear-catching, that everyone keeps talking about how wildly strong this economy is. I mean, GDP was negative in the first quarter, and its GDP now from the Atlanta Fed for the second quarter is now at 0, and it's been trending in a southward direction for the last few months. So where's the strong economy? I mean, retail sales aren't exactly strong. Personal consumption expenditures, they look strong because there's inflation in there. Housing has become extremely less affordable. The average monthly payment, the monthly payment on a median home, if you just take the median home price and the 30-year commitment rate, that payment is up by 45% year to date. So it's pretty obvious that these higher mortgage rates, which have doubled in just the past several months, are going to cut into things. You mentioned the consumer sentiment. That's terrible. And I think it has a lot to do with the price of gasoline, the price of cars, and the price of housing. But it's still, the number's the number. It's the lowest number ever on consumer sentiment. And we all know that a lot of consumption was pulled forward. Durables exploded to the upside 2 years ago and stayed elevated until very recently and are still way above trend that was in place for the years prior to the lockdowns. So you can't expect any growth at all. You should be expecting negative trajectory on the nominal value of durable spending. Non-durables is also above trend. So what we got left is services, which was correctly pointed out by Jay Powell, that the inflation rate is very, very problematic in services, and it's probably going to get worse in the months ahead because there's so much pent-up demand for travel and leisure and hospitality. But all three of these things are either at or above trend. If we go back to 2016, we took a huge hit during the pandemic, but we've more than recovered by a lot in durables and non-durables and are almost back to trend in services. So where's the growth supposed to come from? It's not housing. Is it going to come from global trade? Doesn't feel like it. So I have a hard time finding where the economic growth is naturally going to come from. And while you're raising interest rates and promising multiple times that you're watching inflation, you know it hurts people, you care a lot about your duties to take care of the American economy, and so you're going to be moving interest rates higher until the inflation rate comes down. So we really have, Jay Powell admits it's one of the most difficult times, like everybody knows that. And to say that we're going to avoid softness, I mean, we're already in a soft-ish landing. That's putting it kind of kindly. So if you think things are going to get worse, and by raising interest rates to fight inflation, your intention is to make things worse, I just don't think the non-recession case has much of a probability.